Hi everyone, good morning. So I have to announce that today will be our last paper review on LCCI Level 3 Financial Accounting. This is our 26th set of paper. I have promised 30, but why 26? Why do we stop here? Because when I review this year 2017 April, I can see that the format of the paper is substantially different from what we have now. That's why I think I am not going to further work on the remaining 4 papers. For this paper today, we are going to look through it, find some points that's worth discussing. Because if the format is different from what we have now, then it is, do not have much value, in working on that. So that's why it will be our last paper. And we are not going to work on it question by question. If you look at the format of the paper itself, for more recent papers, we have a question booklet and an answer booklet. But then for this year 2017 April and before, we just have one booklet. So everything is included in one booklet. And the way it asks question is different, quite different from what we have. Still there is value in doing it. But then when I compare the time that we spend, and the value of it, then I decide to stop at this 26th set of paper. So let's go take a look. So year 2017 April paper, LCCI Financial Accounting Level 3. The paper reference still ASE20097, still the same. But then you see the total mark for this paper is 115. And 5 compulsory questions as well. So let's take a look. First question, it is sundry topics. Let me correct. We are not going to work on all, but then we will look through the paper together. So first of all, you are asked to state the business objectives of a private sector business. Of course, earning profit or maximizing profit is the number one goal, as always. And you also want to increase market share. You want growth. That is growth. And you also want to provide good services, products or services to the public. Most of the business start with small businesses. The owner of the business have something that they love, and they want to share with the public, and of course, in the meantime, earn a profit. Next, state 4 types of error. Usually we are only asked to state around 2, but then it asks you to state 4 types of error that would not be corrected through a suspense account. So we have our old friend, error of commission, error of principal, error of complete omission, error of original entry. These are the my favorites, that I want to quote. Describe how inventory is valued according to the accounting standard. So according to IAS2, it is valued at lower of cost or net realizable value. Explain Which accounting concept applies when creating an allowance for doubtful debt? Of course, prudence. Okay, and you have to explain, okay, because you have possible loss, okay, and then you have to recognize it immediately. Okay, these are not difficult. Okay, we know it all already. Okay, so we have calculation of allowance for doubtful debt. Okay, and trade receivables, this is opening. Trade receivables and allowance for doubtful debts given to you. Okay, and then closing. Trade receivables included debt that needs to be written off. The owner decided to maintain 5%. Okay, so you have 75750 minus 750 and then multiply by a 5%. That means 75,000 multiplied by 5%, you have 3750. You compare, okay, so 4250 minus 3750. Okay, you have 500 decrease. Okay, but then let's be careful because you are not asked to calculate the decrease. Okay, the amount of allowance for doubtful debt to be shown in the statement of financial position. Okay, I almost got tricked by it. Okay, of course, show the calculations there. Okay, and prepare the journal entry to show the adjustment in the financial statement for the allowance for doubtful debts. Narrative not required. Okay, then we have to show the 500 adjustment. Okay, so there is a decrease. There is a decrease, okay, in the allowance for doubtful debt. Okay, that means it would be an income. Okay, so how do you show that? Okay, it goes into the allowance for doubtful debt account, of course. Okay, this is the statement of financial position part. Okay, this is the account itself. Okay, the allowance for doubtful debt is in the credit side, so if you want to reduce it, you debit. Okay, so we learned this way before. Okay, and this adjustment is also done in the extended trial balance. Okay, but how about the credit entry? Okay, it would be again allowance for doubtful debt. Okay, but then this adjustment is done in the statement of profit or loss as an other income. Okay, next, Tim, an assistant accountant in a paint factory, has raised concern regarding chemical waste disposed in a river. Tim's line manager explained that it is costly to dispose of the chemical waste safely. Explain Tim's responsibility under the concept of public interest. Okay, so you are an assistant accountant, okay, and you know about this concern. Okay, you should, of course, voice out to the line manager, okay, or if the line manager is not listening, then you voice further up the the organization, okay, to the director, to the CEO, etc. Okay, you have to voice out, urge them to pay attention to that, to really take steps to protect the environment. Okay, but then if, okay, because of the concept of public interest, okay, if the company is not doing anything on this, okay, then you have a responsibility to tell the public, okay, to maybe take it to the police, okay, take it to the related government department, okay, to make a complaint, to let it be known. Okay, so this is this is a concept that we need to learn, okay, compared to, in relation to the concept of confidentiality, because something you know in the course of your work, okay, should not be told to an unrelated third party unless there is a violation of the public interest. Okay, so this is for question 1, 15 marks. Okay, you can see you have very few information to work on the figures. Okay, question 2. Okay, it is a very standard single entry question. Okay, so you can see you have opening and closing balance, and then receipts and payment. Okay, and also some other information about sales, okay, or other things, other adjustments. Okay, and you have to prepare the trade payables, trade receivables control account, the cash account, and then the statement of profit or loss. Okay, and that's it. Okay, so I think this question would be good practice for you. Okay, although in our more recent papers we seldom see a single entry question, okay, that is quite complete. Okay, you have most of the items. Okay, usually you have shorter ones. Okay, it tells you on more specific items, for example, unbanked revenue, how you adjust your accruals prepayments. Okay, so this is quite a full question. Okay, I guess if you asked to, you can even prepare the statement of financial position as well. Okay, so we are not going to work on this question, okay, but then it is a good question for you to try out on yourself. Okay, so let us continue. Question 3. Question 3, okay, is about partnership, okay, retirement. You can see, okay, capital account, current account, okay, and then Roma retired. Okay, let us read through to see if there is anything that is new. Okay, if not, okay, I will let you to try on your own. Okay, so Roma, Sam, Tyler were in partnership sharing profit and losses in the ratio of 2 to 1 to 1 respectively. The partnership agreement provided interest on capital 12% per annum and annual salaries of $24,000 for each partner. The partners provided the following information: capital and current account balances, okay, all positive balances. Okay, after 1 year, Roma retired from the partnership. She left $100,000 of her capital as a loan at a rate of 15% per annum, and remaining balance was paid to her by check on 30th June. Okay, usual things. Goodwill was valued at $30,000 and partners agreed not to maintain goodwill in the books. The non-current assets were revalued as follows: premises valued at $50,000 more, fixtures and fittings valued at $5,000 more, motor and vehicles $11,000 less. Okay, Sam and Tyler continued the partnership with profit and losses shared in the ratio of 1 to 1. Their salaries were raised to $27,000 per annum for each partner, and the drawings for the year given to you. Profit for the year before appropriation, $84,000. Okay, so let's see what we have to do. Okay, is to work on the appropriations account first. Okay, so this is for last year. So last year, $84,000. Okay, let us read through. $84,000. Okay, and then 12% applied to capital account, interest on capital, and then $24,000, and then share of profit. Okay, so appropriation account, and then the current accounts of the 3 partners, capital account of the 3 partners. Finish. Okay, so after appropriations, after the current account, okay, we just need to remember, okay, is there any drawings? Yes, okay, drawings given as well. Okay, so Roma will leave the business. Okay, so current account of Roma would be transferred to the capital account. Okay, and in the capital account, okay, apart from the transfer from the current account of Roma, we have the revaluation. Okay, so you can see 50,000, 5,000, 11,000 downwards. Okay, that would be 44,000 revaluation gain. Okay, to be shared among the partners using the old ratios. Okay, and then after that, we have goodwill creation, and then goodwill written off for the remaining two partners. Okay, and then we have the final settlement. Okay, so it is just the same, but then usually we don't work on the current account of all three partners. Okay, these are old formats. Okay, this is more like what we have in our second level old syllabus accounting, bookkeeping and accounting. Okay, it asks include partnership, okay, which we have to do current account, capital account of all three partners. Okay, so not difficult, and 26 marks. Okay, you can see in our more recent paper we won't have so many marks, okay, for working out the appropriation account, current account, capital account. Okay, because sometimes, okay, for appropriations account we worked on so many things and we just have 4 marks. Okay, because they think it is basic concepts for you. Okay, so anyway, let's go on to question 4. Question 4, okay, we have a lot of information about non-current asset. Okay, Toon Limited provide the following information. Okay, so depreciation policy given to you, and then for opening and closing balances, okay, of land and building, machines and motor vehicles. Okay, you also have revaluation of land, okay, and disposal of machine. Okay, so state 6 adjustments that are required in the profit, to reconcile the profit for the year to net cash from operating activities. Okay, so we have, of course, the disposal gain, disposal loss, depreciation, or and then the 3 adjustment on working capital. Okay, so I do not know if it treat disposal gain and disposal loss to be the same. Let me check. Okay, so according to mark scheme, okay, it group disposal gain loss, okay, as the same item, which I think is fair. Okay, and then 2 other items are given, that is interest paid and tax paid. Okay, of course, when we have the reconciliation, okay, usually we start with profit, but then we'll add interest, we will add tax expense, interest expense, okay, and then down in the last few items of the reconciliation, we have interest paid and tax paid. Okay, this one is tested in level 4 financial accounting, but not here in our most recent spec for the level 3 financial accounting. Okay, but then it sets tax paid, interest paid. Okay, so okay, statement of financial position for the 2 years. Okay, and then you have to prepare the statement of cash flows. Okay, given to you already the net cash from operating activities. Okay, so it is still our usual thing to do. Okay, let's scan through to see if there's anything else that that will be of interest to us. Okay, statement of cash flows. Okay, so let us go back to the part for non-current asset. Okay, so land has been revalued upwards. Okay, so this increase, okay, there is an increase of 5 million. Okay, so 5 here. Okay, this increase is not paid. Okay, it's revaluation. Okay, and then buildings, okay, we have to depreciate 10%. Okay, land and buildings, okay, for here, if land is now 20 million, okay, that means building is only 10250. Okay, do we need any? Okay, we don't need depreciation, so we don't have to calculate. Okay, we don't have to calculate depreciation. Oh, if we calculate depreciation, then we would waste a lot of time. Okay, very good trap for you to waste your time. Okay, so we only need to know about the investing activities. Okay, whether there's disposal, whether there's purchase. So 225, okay, we have to know how much further is purchased. 22500 plus 5,000, and we now have 30250. Okay, that is 2750 investing activities. Okay, machinery, there is disposal, so we'll look later. Okay, add 5,000 investing activity, sorry, 500. Machinery. Okay, yesterday I have a very careless mistake, okay, about the disposal. Okay, today we read carefully. On 30th November, which is a machine which was originally purchased costing 60,000, 600,000 was sold for 375. Accumulated depreciation 250. Okay, so we don't need disposal gain loss. Okay, we need the proceeds given to us directly. Okay, not giving us the disposal gain loss. Okay, very good. Okay, we know the figure directly. Okay, and the cost is 600, so minus 600 here. Okay, and then plus how much? Okay, nothing, because 8,000 minus 600, 7,400. Okay, so good. We have 2,750 and 500 investing activities negative, and then 375 investing activities positive. Okay, this is the same company, right? Toon Limited. Okay, let's continue to look at Toon Limited's financial position. Okay, so these 29550, 23200 should be done already, but let's check. Okay, so not given. Okay, I'm not going to check. Okay, because we have calculated everything. Okay, if it is not equal, then it is bad. Okay, so inventory, we don't need to deal with it. Trade receivable, no. Okay, trade payables, no. So short-term investment, okay, is cash and cash equivalent. Okay, we have bank cash and also bank overdraft here. Okay, that means we have 55 plus 5 minus 82. Okay, we have closing balance of 22, and then 45, 13, 20, 78. Okay, there is a decrease of 100. Okay, this part done. Ordinary share from 18,000 to 20,000, added 2,000, added 200 for share premium. Okay, so here we have 2,200 for issue of shares, financing activities. Okay, revaluation reserve from 0 to 5,000, that corresponds with the revaluation we have here. So it's done. Okay, so retained earnings, okay, it helps us find profit or dividend, but dividend given to us directly. Okay, we can see if it is correct or not, but profit is not given to us. Okay, anyway, so these all done. Okay, next, bank loan from 125 to 100, so there's a decrease of 25. Financing activities negative, and then no. Okay, finish. So let us see if we can balance the thing. Okay, 1100. Okay, we're not going to write all the words. Okay, but then let's see if we can balance. Okay, investing activities, we have 3. Let us go back. Okay, purchase 2750 and 500 for purchases, 375 for receipts. Okay, so 2750, 500, 375 for receipts. Is it 375? Let me check. Yes. So negative 2750, negative 500, 375. We have 2875 for investing activities. Okay, how about for financing? We have 3 things. 2200 for the issue of shares. I think 25 for the repayment of bank loan. And we also have dividend of 300, I guess. Let us check. Let us go back. Okay, so 2200, 25, okay, and then 500, 500, not 3. 500. Okay, so 2200 minus 25 minus 500. We have 1675 positive. Okay, let's see if we have a decrease of 100 or not. Okay, so 1100 minus 2875 plus 1675. Yes, 100 negative. Okay, and then we have the remaining 2 items. 78 and 22. 78, 22. Okay, so it is still very similar with our other questions regarding statement of cash flows. Okay, very similar. Okay, nothing that different. How many marks for this? 11 marks. Okay, so let's also go through the last question. Last question, let me see what it is. State one reason why each stakeholder is interested in the performance of a business according to the following categories of ratio. Okay, so why are they interested? Stakeholders, okay, it is very specific. Okay, we have to be careful. Let us read on. Okay, I think it's a good question. Okay, because it urges you to dig deeper. Employees, okay, look at the profitability. Okay, still you can say about job security. Okay, but then I will say for bonuses. Okay, because some company, if they can achieve a certain level of profitability, for example, 10% ROCE, then the finance manager may get a larger bonus. Okay, something like that. Okay, so I would opt for saying that it is about a bonus. Suppliers, of course, liquidity. Okay, suppliers want to know about the liquidity because they supply us with the goods and then we have to repay. Okay, and they want to see if we have good liquidity and are able to repay the amount owed to them for purchases, okay, and competitors' efficiency. Okay, so this one, okay, our competitors, of course, they want to know our profitability, okay, but that profitability somehow comes from efficiency, okay, efficiency in managing goods, in managing our receivables, our payables, okay, or whether we can efficiently produce goods, okay. So this is the source of profitability, okay. Efficiency is source of profitability, okay. So they are looking at the process rather than just the results, okay. So to compare whether whether we are better or not, okay. And sometimes, okay, after we prepare, it is not the end, okay. It is to learn from the good things of others and avoid the failures of them, okay. So we have additional information given to us: bank drawings, equity, expenses, open and closing inventory, purchases, revenue, trade payables, receivables. I think we have to calculate for, yes, okay, given to us, okay. You can see again in our level 3 financial accounting recent papers, we don't have so many marks for calculating ratios, okay. So accounting ratios, okay, we most of the time we need to analyze, okay, but then this time you are asked to calculate, okay, these things, okay. So I'm not going to continue with the calculation, okay, because it is not needed, okay. And then we have to compare for the liquidity, profitability, and efficiency, okay. Of course, all these will be awarded with own figures, okay, even if you have calculated wrongly, but then if you write according to your answer, then it will be fine, okay. So last, state 3 advantages of these two companies joining together to form a business partnership, okay. So I think of course we need to look at the ratios, but then simply speaking, okay, of joining a business, okay, joining into a partnership from two similar businesses, okay, you have economies of scales, you have joint talents, okay, you have more funds, okay. That would be the main advantages, okay, of these two joining in as a partnership, okay. So I think for this question, because you know that these two are two different businesses, okay, you are not just having a business and then one other person join in, no, okay. That's why I will say economies of scale, okay. If they are businesses that are in the same industry, but then different stage of the production, okay, then we have vertical integration, okay. We also have benefits in this, okay, because if you have your suppliers joined into your company as a partnership, then you are guaranteed of your supplies of goods, okay. And for the other parties also, they are guaranteed of an amount of consumption, okay, or purchases or sales, okay. So 27 marks for these whole questions, okay. And that will be all today, and for this series 26 papers, okay. Although we have just worked out 25, and in the 26 we look through it, okay. It's how many minutes now? I can't see it here. 35 minutes, okay. So I sincerely oh, why are you crying? Okay, I hope that everyone can get good results, but remember, everything of course comes from hard work, okay. And when you work on these papers, you know which area you are weak in, okay. You know already, okay. So try to work on those weak areas as well, okay, because in this type of questions, papers, you don't have any choice of the questions that you attempt. Okay, so you have to know everything in the syllabus, in the specification, and good luck for you. Okay, 4th of September. Good luck.